following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the second day of June. A little wet out there, as we usually have that the first week of June in the Boston area. And very interesting session today. Bad news came across. 5 or 6 planes with threatened bomb threats were there. Is that the new thing? Is that what's going to happen? They're going to make travel and all sorts of inconveniences. I hope they're just inconveniences and nothing really happens. All right, let's go to the market. So we've had some great shows earlier today. The Dow actually was much was it almost 100 points lower? Now it's only down 20 at 18,020. What I'd say to subscribers is that we've got to anticipate there is still residual strength. It's in the shape of, it comes in different forms, and it comes in forms that's the end of the month, the beginning of the month, and all sorts of things. Sharp pullbacks have been bought, but at the same time, sustained rallies have not been able to hold their positions. And this is a very bifurcated market, becoming even more so, meaning within the sectors, the stocks that have been most important continue to be very important. Stocks that are making all-time highs continue to trade at all-time highs or near all-time highs. But over the last 3 to 4 weeks, we've begun to see that some sectors are beginning to fail and some stocks are beginning to fail. More importantly is that the weaker stock, in my work, I'm getting a much greater sense of weakness than strength. But here's the catch-all. As long as we're holding in a certain range, let me just go to this chart right here. This is my Dow chart. Look, the Dow went right to that dashed red inside track support level this morning, went to 17,925, maybe about 8 points, 10 points below the actual line itself. However, what's really important is that there's a springback. Once again, there's a springback. And what I said was the 120-minute chart showed that it was very close to at least attempting a rally. And there it is. That's the Dow, the diamonds. That's the Spider Dow Jones Industrial Average ETF, call them the diamonds, trading at 180.37 up. Whoops, no. Down 3 cents, down 4 cents. And what's really important about it, look at that green moving average. What is that? A green? We'll call that olive green, light olive green. That green line is the 200-period moving average, and look how it's been just fabulous support. It was resistance, then boom, support on the pullback, support. Then it broke down. Now it's becoming resistance. We'll see if it's able to become support. I suspect that it's going to be more meaningful as the day goes on. And that is 180.28 is going to be the level to be watching. We're at 180.40. All right, let's get out of this, and I'll want to show you something else just very quickly. One thing that I almost forgot about this morning in all my zeal in trying to cover as many things as possible was to mention that a high above 14.86 in the 120-minute the VIX index would start leg D. And if there was a sharp move to the upside and then a sharp pullback, we've seen so often that peak Ds allow for a bounce in the market, and that's exactly what we're getting right here. So the other thing is that the sideways move, let me just go back for 1 second because I need to just explain this a little bit more clearly. That sideways trading range that we've been in for months, in fact, for most of the year, is continuing. And because of it, we have to consider that time, just like in life, time can be a great healer and it can be in injuries. Time can be a great healer. So we can see that in the market, time can do exactly the same thing. After all, what is the price in the stock market? It is a cumulative price of, with a running, to basically think of it as a running total and cumulative price of a fixed price point of human emotion. I just make it as simple as possible. It is a price point of human emotion. Yes, there are more and more automatic trading vehicles, but they're still programmed by human beings. So now let's look at this in a little bit more detail. And what it says is the Dow has 18,102. This is changing price. Today is 18,102. The 9-period exponential moving average, that maroon color right there. Let me make this a little bit bigger so you can see it right there. You've got a little bit of a cross to the downside of that faster moving average, which essentially says, be careful because you can have a little bit more of a bounce. And we're going to have to watch this real closely, because if by the end of the day selling pressure comes back in, then that level that we were looking at a moment ago, let me just move this a little bit away, that 18,101 says 1, 2, 3, 4, 5. This is the 6th day that it will become a strong repellent. Look at the MACD, how big it is, how wide it is, negative. Look how wide the stochastic is, negative. Look at the histogram of the MACD from the 0% line, minus 28, negative. So there are a lot of things that says any bounce should fail. And we're looking at a market that is starting to use the 9-period moving average instead of support as repellent. Done it enough times to say that the sell mode remains in place in the Dow. In the weekly, let me move this away here. In the weekly chart of the Dow, there is no sell signal yet. There are many signs that say that there's a real good chance that if the Dow closes under 18,000, let's be safe, let's call it 17,950 on Friday, that the weaker technicals that we are looking at will kick in and give us the first sell signal in quite a while. All right. So we've done that. Dow's down 14, S&P's down. S&P is at SPX.X right there. S&P's down 261, slightly weaker than the Dow. And it hit that trend line support as well as the, always forget which that is, 50-period moving average support. And the trend line, you see that trend line that was the falling X formation? That often becomes resistance, and then it becomes support. And here, once again, it's support. That's very important. And the 9-period moving average is at 2114.50. The weekly chart has made a peak E, but so far it's not a dramatic pullback. But look at the lower lows that we're seeing in the MACD, and look at the stochastic, which is at 85%, which is good and helping, but the stochastic could very soon start to deteriorate. Watching this one real closely. Don't have to talk about the monthly yet. No signals yet in the monthly. In the price, absolutely, I'm seeing signals in the MACD, not yet. Fully in the stochastic at 89%, but way lower than the 95% it was at. And that says heads up, that's all. Heads up can last for 2-3 months before you get an impact. All right, let's go to the QQQ. The QQQ is at this time 110.12, has to get to 111.17 to go to leg D in the weekly chart. But the weekly chart has an F/C. So at any point yet could fail. It doesn't have to do much more than that. When I'm looking at the IO, and the parameters would be 109.50 to 100 and what was the low today? 109. Yeah, I'd say 109.50 to 109.20 would suggest that the QQQ is starting to fail, and Apple's a big part of that. I think what 15% or something. That says to me that the Apple chart, which I've been saying is not looking that great, is also not looking that bad at the moment at 130.07 down 49 cents. I suspect that if Apple was to take out 129.20 to 128, probably 73, somewhere around there, close under that, that would be a negative. Quick message in the den. Could I look at FEYE? Let's do that right now. FEYE, wow, fabulous move leg, E to the upside, D to the daily. Oh, you know what? I'd like to come back to this because it's acting very well. So that's D right there. And an E is very close to some kind of a pullback. But that would be a near-term pullback because the stochastics at 91% and MACD is still very good. FireEye Inc., cybersecurity. Oh, I had another one there, cyber. Where did I put it? I saw the name about 10 times on a notepad that I had. Cyber. Yeah, that was not active. So this is once again, you've got the cyber, the security area. Cyber is not acting as well. CyberArk software, not anywhere close to as well as FireEye. Interesting how that happens. That's the selectivity of this particular market. Let's just run the numbers quickly. You got the comp index down 7 at 5,075. You got gold. Let me go to the gold chart. Gold is attempting a bounce. It's up 3. And I'm just saying to you that 9-period moving average of 1194 is very strong resistance. That's really not the resistance. The resistance is this whole area in the 197 to 199 area. That really is tough to get through. If it can close above there, I suspect that yesterday's sharp candle of 1204.70 will be tested at the top. But at this particular point, I still think, now it's going to be very interesting. I had a caller, we were looking yesterday, I think it was, or the day before. Yesterday, and I was looking at the dollar, and I said, it is so close to going to 97.79, which would be leg C, and lo and behold, overnight into this morning, boom, it just goes straight to the downside. Remember what I had drawn yesterday? These chart patterns they're unbelievable. I mean, over the years, the more I've drawn them, the more I respect them. I was saying even yesterday, patterns in the market are simple. They're either going straight up or straight down, single leg A or single leg up, single leg down. Or you can get the cup or V-shaped formation where the left side high gets tested after a slide and it bounces towards that. What happens after that, a breakout or whatever, is important. And an inverted V or an arch formation. So you got your arch, your cup, and your straight line. 3 basic designations of chart pattern. Within that, of course, you can get tons of variations, but keep it to the core. Now I'm looking at the dollar, and it's coming back to the 200-period moving average in the 120-minute chart. Most importantly, what I'm looking at is that if the dollar, this is a deep move. This is a very deep move. The dollar by Friday, I'm giving it all the way into Friday, must not break under 95.50. If it does break under 95.50, you want to see gold break at 12.07. You want to see gold at 12.15, number one. Number two is the dollar needs to get to 97.30 just to get back in and say, hey, that was just, whoops, that was a mistake. That was in the daily. It means nothing. But in the 120-minute chart, it is very serious. It's a Chapman wave drop bucket, and we'll look at that. Now, let me just tell you that bonds are down 15. Dollars is down 1 and 17/30 seconds. I'll talk about that when we get back. Down 38, I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and I'm looking at FireEye in a little bit more detail here. It's trading at 47.73 at 47 cents on a day like this. That's very good action. Number one. Number two is, in the 120-minute chart, there's a beautiful, longer-term, there's a short-term vehicle, 120 minutes, but I'm saying longer-term on the chart. Left side, right side price time match, which it took instead of breaking to a new high at 4 o'clock on the 26th, it took all the way until the 28th to do that. Look how many peak Ds there are. This is a peak D, well, it went fraction into an E, pulls back, makes a rogue wave, peak F. Look at the technicals all failing. This is just a typical. I'm going to put it in here. If anybody wants to know what a Chapman wave rogue wave is like, just send me an email. I'll send you this chart. It is just a perfect one because the rule says that it takes out the left side high bar. Usually it's an all-time high or at least a major recovery high. And then what happens is, it doesn't matter that it's a 120-minute chart. The principle is exactly the same. The technicals are fading, and if you were short down at the bottom over here, let me move this over. If you were short right over here, you were correct. Technically, there was no reason why you shouldn't be looking at a pretty good trade. But then all of a sudden, you saw a rally in the stochastic. Not really the MACD, but the stochastic. Usually it's just one of the technical indicators, and it's usually the stochastic. And that rally took the price above the high of the 20th of February, 46.18. Shorts had to cover. It holds it just long enough for shorts to cover, for the buyers who got out saying, oh, it's too high, to say, oh, man, why did I ever touch that? I'm going right back in. And they buy back in. It just holds there long enough. And then the bar that takes out the left side high, this is the Chapman wave. It's like the dollar index that we saw. This is the drop bucket formation, but it's also a rogue wave because it went above the previous high. And it goes all the way to 46.44. The last high I remember was 46.18. So that's quite a substantial move on a 120-minute chart. And then the bar that takes you out is the very bar that if you have the courage and you're able to hold out for the whole bar, whether it's a daily chart or a 120-minute chart, you want to see that bar go from the very top to almost the very bottom by the end of the candle. And then to follow it up with either a doji or an ugly red candle lower down. And it's exactly what it does. And then it makes lower lows and lower low highs. And at some point real soon, you're trading about where you were just back where it was at in the 43 to 42 area at 313. That's 130 on the 24th before the big move up. That's the rogue wave. Remember, the wave you're at the beach, says high tide at noon. At 12:05, 12:06, you're sitting down on the furthest rock towards the ocean because you think, okay, this is the safest. I love this rock, my favorite rock out there with the waves and all that stuff. And you get your suntan lotion, you got your dark glasses, you got your sandwich, you got your whatever drink it is, and you sit down, you just lay down that towel, and that splash. It was that one wave. You turn around. By the time you wiped your glasses and everything to look around, the tides had gone out. Yeah, well, what was it? Well, what that was the rogue wave. It didn't see the sign that said high tide at noon, and at 12:05 it had to finish its own course, and it goes right back to the bear market, in this case, the tide going down. That's exactly what happened here. So, enough with that story. Where is it now? It's in leg D. It's very close to some kind of a pullback in the daily chart. I wouldn't get into it right now. If you're already in, that's fantastic. All I would do is try to keep a core position. Why? Because at 47.77, it would have to slice right within days. It needs to slice between 45.72, the 9-period exponential moving average, and 44.89. Another key metric that we're looking at here, between the whole 45.72 and 44 area, if in the next week and a half Firefly starts to take that out, you've got yourself, and I had even drawn this in, this is a stock that I really wanted to buy earlier. Sometimes I write these things down, but then I don't check it out. Oh, I don't follow up. That's not a good thing. But anyway, missing opportunity, you can always make up opportunity. And this is opportunity because it acted well. I would say it's only in leg C after making a spectacular move near 100 and then plummeting down to the mid-20s. Now it's a nice bounce back in leg C in the monthly chart. There's a tremendous improvement in the weekly and the monthly, but I still think it's going to go into a trading range if it breaks the 45 area. And if it then takes out 44, you can see it just goes sideways for the whole of June into the testing the 200-period moving average of 40.98. So at this particular point, keep your core position. I would take a little bit off. If you've got really good profits, I would take off right this minute as we speak, in just a little bit, and plan to take that, put back. You don't have to wait all the way to the bottom. You could just place it as a trade in the future, good until canceled, to buy back part of that small position you've taken off, or the whole position, at 44. Let's call it 44.60, and give me a call the day it hits. Okay, so we'll be back. The Dow is down 38, S&P's down 5. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the next question was, would I do GoPro? So S&P asked for FEYE, Fire Eye. J in the den asked for, J&J asked for GoPro. And GoPro. Yeah. GoPro leg C in the day in the 120-minute chart, leg C in the daily, leg C in the weekly chart had a fantastic move from the IPO, which was under 30, and screamed up to the high of 98.47. That is, I mean, that's huge. 98.47, and then screamed on the way down to 30. Was it 39 or 38? It was 37.13, 37.13, and it's trading right now at 59.08. That's a huge move. So it's a leg C in the weekly. So my thinking here is that GoPro is still acting well. It has 58.18 as moving average support, but 55.62 is really very important. A close below that suggests 54.30 to the 52 area could hold, and this has very sharp moves up and down. Once it's in place to move higher, it tends to garner a lot of speed. On the way down, it tends to garner a lot of speed. So the moment it stalls and starts to take out by 4 to 5, 10%, as soon as it starts at 10% correction, you have to be concerned because that 10% correction can increase. Look, it went from 54 the other day, 54, a 10% correction would have been to 49, and it went from 54.06 on the 29th of April down to even deeper. It went to 46.50. So once the momentum goes into play, and all it did was really filling the gap from that huge information that came out on the 29th. Think something about the different forms of cameras that they had. Well, GoPro, GPRO, trading at 59.10 or 58 cents today. Nice action, new recovery high. I think it can go a little bit higher. And my thinking is it's going to hit the 60.50 to 61.50 area, somewhere in that area. And then you got to be careful, because if it pulls back here, makes a peak C, and by Thursday it goes to a leg D, that D is going to be very dependent on whether it holds or reverses the same day that it makes it. So we got to watch that one very closely. But so far, if you're long, I would say that's a good position to get into. I got a feeling that you can tell fund managers are going to the sexy stocks here to make up for the losses they get are garnering in the old high tech that have started to fail. And now you've got the new high tech that started to come alive again, the IPOs. So they're playing for points. That's all. And you want to be in there when they're playing for points. That's the reason why I saw it, and I don't know why I was so slow. I didn't get in. Apologize for that. GDDY. GDDY is GoDaddy. Nice action. This is leg. I'm going to call it leg B in the daily. This is leg B in the weekly, and only leg A in the monthly. So GoDaddy, which is, what the heck's GoDaddy? Well, whatever GoDaddy is, let me just check it out. GoDaddy, so 21% short. Oh, you always want that. I love that. The 10%, 20%. That's like Apple. That's why Apple is not tanking. It's got that news there, and as long as it's got that, it's going to take market conditions for it to really start pulling back. So leading provider of web registration and hosting services with 59 million domains. GoDaddy, very interesting. Okay. Oh, I'm going to put it down on my list here, because if you want to just be in these stocks for percentage gains, it's good to know that what's available. So GDDY is a little early to the game here. Very nice. Okay, so what we're looking at, GDDY is traveling at 27.91 right now, up 82 cents, up a bigger percentage than the others I mentioned. This is an overlapping wave, well, calling it a B for now. And what's really important about it, let me go to the 120-minute chart, is that A, B, C, D, it's gone to an E, and that E says I'm holding well, but if I do pull back, 27.50 to 27.30 is the support I need to hold. And if I break out, that breakout would give me a trend line target of right there, Oops. Trend line target of 20, depends when, 28.30 to 28.50. All right. Yes, acting very well. Good eye. GDDY stands for good eye. So GoDaddy Inc. Let's see. Yep, GoDaddy Go. Oh, GoDaddy Go. Yep, we remember those songs. Oh, let me just talk to you about Chapman Wave, 120-minute chart. For any of you who are able to get 120-minute charts, use them. You can use them as swing trades. They are fantastic. And they almost always go to at least a D. Look at this, A, B, C. I didn't even know. I just got this just a moment ago. Look, GoDaddy. Leg D, sharpest decline, sharpest move up since 15:30. That's 3:30 in the afternoon of the 6th of May. That's Eastern time. From 24:15, screens peak A, peak B, peak C, breaks peak C by 1 penny to 26.30. Starts leg D and goes all the way to 27.73. Pulls back in trough A, B, C, D. I think it made an E. 25.51, yep, 25.49. Starts a brand new move. And what does that brand new move do? It goes peak A, peak B, peak C, peak D, and this is an E. So it took us to at least a D, but it even went to an E. E's where you've got to be a little bit careful here. But so far, it's acting quite well. All right. So that's GoDaddy. Now, what I'd like to do is this. Now let's just run some things. Very quiet today. I actually have a theory about the quietness, and the quietness occurs when people feel that they're either on the wrong side, or they're not happy. And unhappy means that you're kind of watching and hoping. I don't know what you're hoping for, but this is a good time to call. Don't hope and wait. Just wait there. Do something. So you've got yourself a cup formation, a breakout. How it closes in this bar and the next bar is going to be very important. Why? Because with a cup and ladle breakout, you can go to a D or an E, but then you've got to be very careful because you've got to pull back to test the lip, which is at 27.73. That's going to be key. So we'll be watching this real closely. Okay, so let me do this. I want you to do the IWM. The IWM right now, that you see, this is nice action. It's at 124.59, the Russell 2000, but it keeps getting repelled at this inside track resistance area, and it keeps getting supported by the, it's really not an asymmetric, it's more like a symmetric triangle on its side. So this inside track, Chapman inside track propellant zone has worked. Even worked today, even though the stochastic's at 74%, the MACD fast moving average still shows residual strength. So we'll look at the 120-minute chart, and let's go on peak A, pulls back, peak B, and then pulls back. And we'll see what happens. Because if the IWM can break above 120, if IWM can start to trade in the 125 area between today and tomorrow, that'll suggest that there's still enough residual strength to keep the market buoyant. Remember what I've been talking about? I go back to this chart, that you can stay in a sideways trading range longer than your patience. Look at this. I'm going to squeeze this chart as much as I can and just show you. Look at this. Basically, the Dow has been in this pattern since the double bottom of 17,034, but that's not really the issue. You can talk about the trading range that except for that the momentary aberration below 17,500, it's really been between 17,500 and 18,200s with a momentary blip into the 18,350 area. But it's basically been in this trading range for a long time. And that long time says, don't get impatient. If you have longs that are still holding well, try to keep them as long as you can. Why? Because if it can resolve the sideways move by continuing sideways as the market is, if it completes its digestive phase without breaking the Dow 17,500's major support, then what we're looking at is every rally should take your stock. If it's holding well, stocks that are holding well should participate in any further move to the upside. So let me just get this out the way. Question about Facebook. Sure, Facebook. Oh, let me just say IWM. So the support is it breaks down in the next 2 days if it closes under 123.30. So it has to break over 2 points to the down. 123. 1 point to the 1.5 points to the downside, very negative. 1.5 points to the upside from here breaks that resistance. That'll be very positive. So, okay. Now, I just wanted to go back to the TLT. I'll look at Facebook in a moment, but I promised people had asked how you got emails about this. Okay. You went to a peak. Let me just finish this up. What did I tell you about the Chapman methodology as far as it relates to the 120-minute chart? For years and years, I found that the action of going from a most identifiable low bar to subsequent highs that take you to a full buy signal to buy mode, with the implication that you're going to go to a D, occurs over and over and over in the 120-minute charts. And if you're learning how to swing trade, try to get a longer duration than a 60-minute chart. And if you can get the 120, I think you'll be greatly, greatly satisfied, because there are so many times that you can get tremendous information. 123.57 was the high just a couple of days ago, 123.57. It's trading at 119. That's 4 points down. I mean, 4 points is big in this kind of Eiffel Tower move. What's an Eiffel Tower move in the Chapman wave? It is this pattern here that we call the uppercase A. And what does that look like? It looks just like an uppercase A. It looks like you're going straight up. Looks like you're going straight down. I usually make it red because it's volatile. There it is. Actually, you know what? I like when I do this. I like when I do this. I put it, there you are. And now it's a quote. A, straight up, straight down. Where's the support? Well, it's into the gap. The support should come in right here in the 119 area. If it breaks down and goes under 118, this is going to be very interesting. Why? I'll tell you why. Because the TLT, the iShares 20-year Treasury Bond ETF, should be garnering money as the market is showing this digestive phase, this consolidation phase. So if we're looking at, and it had a 2-bar reversal to the upside. So if 118.13 is taken out, that is not good. That's just saying bond yields are going to go higher, and 114.72 is the 200-period exponential moving average, which has avoided hitting for quite some time. And since last year, back, I think it was a year ago. Yep, more than a year ago. It took off back in the week of the 11th of April of last year. So this is quite something. And there's that pattern. There's the arch formation, that lowercase h formation that broke its left side. And it says you can get another 1-to-1 to the downside. Whew, bonds are not acting well. And that's interesting, because if bonds are not acting well, are they supporting the Dow as money comes out of bonds into stocks? No. This is very interesting because you've got the market weak with bonds weak. So what's going to lead the market higher? Don't know. We'll see. Okay. Question about Facebook. FB, Facebook, right there. Facebook is like the other high techs. It's trying to have a bit of a rally here. It's got very strong resistance. There's a trend line right there, right there. And that's also probably a falling axe formation. So if Facebook is able to break above, it's at 80.70. FB is a symbol, up 41. If it's able to break above 81.85, if it goes to 81.86, it starts leg B. Not good enough. It really needs to get to 82.30 to show that you're going to have a chance to get what the pattern we've been looking at now for a little while is you've been getting 1-to-1 formations. So 1-to-1 would suggest there's a breakout in the Facebook chart, and that breakout says it could go to, whoa, that is ambitious, 83.60. I always do one step at a time. It hasn't even broken the resistance yet. Breaks resistance, you got 80, round number low. Okay, you got 81.07, then you got 81.31, and then you got 81.69, and finally 81.85. Those are the levels to break on the upside. Very, very interesting. The weekly chart is suggesting that this rally, little mini rally that we've had for 2 days, isn't going to last all that long. So, okay, let me just say, if you have Facebook, I'm not sure if you are in Facebook. If you have Facebook, the support to monitor is the low of yesterday. 78, close below 78.66. I don't want any part of Facebook on the long side. But right now, I would raise my stop on the call position to my entry point, and I would have a tighter stop of about 80.20. Why? Because if it gets to 81.20, that's good action. I'll be back. Basil Chapman, Tiger Technicians out.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I'm just looking at the euro here. It's going to be very interesting. Let me just do this. New. Make that green. Yeah, look at this. Very interesting. Left side, right side, price, time match goes to there. Okay, what I'm looking at here is that the euro is trading at 1.11254, up 0.02. It had a spectacular move that took it all the way back from 1.1207 back on the 22nd of May. It goes kaplop, makes a left side of a cup formation, and goes to 1.081 on the 27th. I chose because it wouldn't, once you've already passed a certain point, it's no use making a plumb line the exact low because it wouldn't work out. So I chose a particular candle and peak to do it, and it goes to 11 o'clock on the 2nd. That's 11 this evening. And what we're looking at is in the 120-minute chart. And what's really important about this is that there's a Chapman wave inside wedge target line that says that the resistance should have been at 1.116, and it went right through this morning, went to 1.119. Now it's pulled back quite sharply, and it says that the 120-minute chart has stochastic at 87%, but turning down, so you got to be real careful. But the MACD is still very strong. And it suggests it could be a little bit more of a rally, and how much more is going to be very important, because this is A, and it'll be leg C if it takes out the 11931 area, and that's going to be very important. Why? Because the high that we're looking at, of course, was 1.1207 back on the 22nd, but there is a cup formation. So we go to the daily chart, and the daily chart says, hey, look. Very nice spike to the upside. Yesterday, this was not looking good. It's still not looking great because it's still forming a potential lowercase h pattern. But what's really important is that this move took it above the 9-period moving average of the weekly, even though it's just a half of the second day of the new week. But this is going to be very important. It's going to be a single leg A up failure pattern, even though it's in leg B, but it's like a single leg A by breaking under 1.102. That's going to be key in the next few days. If the euro dollar currency pair closes under 1.102, that's a big negative. If in fact it holds and it even makes a higher high into the 1.1203 area, that's going to be very positive, and that would take the dollar down. So there's a very important a moment, I should say, for the dollar. So let's do this as we're about to go. We got, great options show coming up in another few minutes, and stay tuned for that. Think or Swim, it's really a terrific show. So let me just do this. VIX index. The VIX index had a pop to the upside this morning. Isn't able to hold those pop-ups, although it's holding better than you would expect. It's up 0.29, the VIX index at 1426. This morning earlier, it hit 15.05. So this is quite a bit of a pullback under the 200-period moving average. The day is young. Anything can happen. If you're watching the VIX index on the 120-minute chart, it's gone. Peak A pulls back. Then it goes A, B, C. This is leg D. D, look, D, pullback. D, pullback back on the, what date was that? Back on the 29th into the beginning of May. And then again on the 6th of May at 16.36, peak D, plop, it goes all the way from 1636 to 11.82. So this is going to be a very important moment. Why? Because if the volatility index really starts to plunge, you will get the trading range back in with the Dow, which is now down only 21 at 18,018, starting to try to test the 18,050s area. If the Dow can get to 18,070s by this afternoon, tomorrow morning, that's quite good action. But if there's a failure and the Dow actually closes down 65 points or more, that's going to say, uh-oh, you really do have to be careful here. Basil Chapman, Tiger Technicians out. Be back tomorrow. Check out my opening call. You might find it very interesting. I'll be right back tomorrow. Have a great day. Stay tuned for the Options Hour.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.